Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about UNIFIRST CORP Annual Report. UNIFIRST Corporation offers a diverse range of businesses and services to various industries across the United States, Europe, and Canada. The company's primary offerings include uniforms, shirts, pants, jackets, coveralls, lab coats, smocks, and aprons, specialized protective wear, flame-resistant and high-visibility garments, first aid cabinet services and safety, supplies, safety training services, rental and sale of non-garment items, plus industrial wiping products, plus floor mats, plus dry and wet mops, plus other textile products, wholesale distribution, and pill packaging operations for non-prescription medicines, garment service options, full-service rental and lease programs, restroom and cleaning supplies, plus air fresheners, plus paper products, plus gloves, plus masks, plus hand soaps, plus sanitizers, specialized services, plus decontamination and cleaning of work clothes, and other items exposed to radioactive materials, plus cleanroom protective wear. The UNIFIRST Corp stock price drop. A year of disappointment. UNIFIRST Corp's, UNF, stock price has plummeted by 13.57% in the past year, largely due to a combination of factors. The termination of Cinta's buyout offer on March 25, 2025, was a significant blow, causing shares to drop by 13.5%. However, it was not just this event that contributed to the decline. The company's quarterly earnings reports and future guidance have also had a negative impact on its stock price. In October 2025, UNIFIRST's fourth quarter and full-year fiscal 2025 results showed lower quarterly profit, disappointing fiscal year 2026 guidance, and lower operating margins. The company cited ongoing investments in technology and growth initiatives as weighing on short-term profitability. The failed acquisition proposal, declining profitability, and weaker-than-expected outlook for the upcoming fiscal year have all contributed to UNIFIRST Corp's significant stock price drop over the past year. Net income and profit margins. A shift in trends. The financial performance of a company has undergone significant changes over the past 2 years. Net income experienced an increase of $41,799,000, or 40.4%, from fiscal 2023 to fiscal 2024, driven by improved profitability and growth requirements. However, this trend reversed in fiscal 2025, with net income decreasing by $2,797,000, or 1.9% compared to the previous year. Profit margins also underwent a notable change. Operating income margin remained stable at 7.6% in both fiscal 2024 and fiscal 2025. However, profit margins increased significantly from fiscal 2023 to fiscal 2025 due to the substantial increase in net income and relatively stable revenue. The reasons behind these changes are multifaceted. The decrease in net income from fiscal 2024 to fiscal 2025 can be attributed to various factors such as reduced gross margins, increased energy costs, elevated interest rates, inflationary pressures, and intense industry competition. In contrast, the increase in net income from fiscal 2023 to fiscal 2024 was driven by improved profitability and growth requirements. Overall, these changes reflect a shift in the company's financial performance, with a notable decrease in net income in recent years, despite an increase in profit margins. The company's financial performance indicates a positive trend in its operating cash flow. In 2025, the company generated an operating cash flow of $108,521, while in 2024 it was $69,062. This demonstrates that the company is able to produce more cash than it consumes, resulting in a net gain. The steady increase in operating cash flow from 2024 to 2025 suggests a stable and improving financial position for the company. The company's financial performance varied across different segments and regions in the past year. Notably, energy-producing areas in the U.S. and Canada struggled, while uniform and facility service solutions experienced a significant decline of 200%. However, first aid and safety solutions showed impressive growth, with an increase of 7.8% and 10%, excluding an extra week. Uniform and facility service solutions also reported organic growth of 1.7% on a normalized basis. Management's outlook on company strategy. The company expects fluctuations in revenues due to external factors such as economic conditions, inflation, and interest rates. Despite this, management believes that their centralized services and economies of scale provide cost-effectiveness. To enhance efficiency, the company is investing in a multi-year ERP project, which will automate supply chain and procurement processes, leading to lower operating costs and reduced customer churn. Management also emphasizes the importance of recruiting and retaining top talent through continuous training and development opportunities. The new system is expected to improve response times to customer orders and streamline back-end processes. However, inflation may continue to negatively impact margins in future periods, and adverse economic conditions could have a material impact on the business. The company's liquidity position remains strong, with sufficient funds to meet its current working capital and capital expenditure requirements for at least 12 months. Management is optimistic about realizing recorded deferred tax assets. Overall, the company is focused on investing in technology and talent to drive efficiency and growth despite external challenges. Acquisitions and divestitures overview. The company has made significant efforts to expand its operations through acquisitions. Although no specific details are provided about the business combinations mentioned on page 22, it is stated that they intend to pursue additional acquisition opportunities as part of their growth strategy, page 6. This indicates a proactive approach to expanding their market presence. On the other hand, there have been no divestitures mentioned in the report. However, one notable exception is the sale of a property resulting in $2,800 million in proceeds, page 27, which can be considered as a form of divestiture. Additionally, the conversion of Class B common stock to common stock in fiscal 2025 may also be seen as a minor divestiture, but it's more related to equity restructuring than a traditional sale of assets. The company has demonstrated its commitment to returning value to shareholders through both dividend payments and share buybacks. In fiscal 2025, the company paid out $24,625,000 in dividends and purchased 402,415 shares, while in fiscal 2024 it paid out $23,345,000 in dividends and bought back 139,556 shares. These actions indicate a proactive approach to rewarding shareholders and maintaining a healthy capital structure. Supply chain disruptions pose significant concerns. The financial summary highlights several concerns regarding supply chain disruptions that could impact operations. Dependence on third-party suppliers for raw materials poses a significant risk due to potential disruptions caused by extraordinary events or circumstances, page 5. Geopolitical issues, such as conflict between Russia and Ukraine or disruption in the Middle East, also threaten supply chains, page 10. Additionally, instability in Mexico affects truck hijackings and security measures, while operations in developing nations are vulnerable to risks like economic instability, civil disturbances, and nationalization of private assets, page 9. Tariffs on imported goods may increase costs or difficulty obtaining raw materials or products from suppliers, page 23. These concerns suggest that supply chain disruptions pose a significant threat to operations, but there is no mention of inventory buildup concerns in the provided summary. That concludes the financial summary for UNIFIRST CORP. Feel free to comment below, and I will be happy to answer them when possible.